never seen these kind of fundamental changes happen and also quickly and all together at the same time. But again, a time when I think India has shown compared to the rest of the world with very high growth, low inflation. We've been helped by a lot of the macro factors, and the largest one being the price of crude, which is also prone to a lot of geopolitics. So to say that in these times, this is the best test that you can actually do in real life. Every morning is a new headline, and how one should deal with it. Sometimes the best thing is not to do anything about it. Truly, I think there are opportunities out there, and the larger Indian corporates could do a lot more offshore as well. It is an amazing time to make the right picks and take the right bets. Yes, you need the risk appetite, and if you have the right financial partners, why not?
Hello and welcome to yet another episode of In Conversation with Fortune India. Today we have with us a very special guest, Mr. P.D. Singh. He is the CEO of India and South Asia at Standard Chartered Bank. Thank you, Mr. Singh, for coming.
Lovely to be here. Thanks for having me.
11 months at the job, and with a 1 month to go, you'll be completing a year. How has the journey been thus far?
Fair to say it's been quite exciting, knowing what all has been happening in the world, So we had a war, we had our neighbors with a lot of geopolitics, the never-ending story on tariffs. We've had two FTAs already signed and third one being negotiated. We've had some of our clients being hit by the worst issues that they've ever had. So, for example, the cybersecurity issue that we know happened to a very large Indian conglomerate. We had unfortunate incidents like an air crash. So I think unprecedented things that we have rarely seen before. And in this entire journey, and representing Standard Chartered Bank has been truly a privilege because we've stood shoulder to shoulder with our clients across all these tough times and made sure that we are the bank standing there to help them out and make sure that we are the ones that are there to take care of their requirements. So an incredibly powerful franchise, a franchise that has been in the country for a long time. So a great legacy and a lot of pressure to live up to some of that. But I would fair to say that, a man at the right place at the right time.
In business, I mean, there can be more structural and cyclical factors at play. And, but we are at a cusp, or maybe we are in the midst of a phase where both the structure and cyclical factors are at play. It's redefining banking, it's redefining business models from what it was in the past. What is your own view on the same?
Yeah. So you're spot on. Actually, you're very right. We've never seen these kind of fundamental changes happen and also quickly and all together at the same time. But again, a time when I think India has shown compared to the rest of the world with very high growth, low inflation. We've been helped by a lot of the macro factors, and the largest one being the price of crude, which is also prone to a lot of geopolitics. So to say that in these times, this is the best test that you can actually do in real life. And this is also a time when a bank is tested by its customers, constituents, regulators across the world to see, how we really stand and measure up to all of these. I think customers will at this time see the difference between banks and bankers to figure out and actually experience, who's the one who's able to navigate this geopolitical risk, help them in risk management, advise them correctly, take them to newer supply chains, and make sure that really the entire complex story is understood to the best possible manner you can, because every morning is a new headline and how one should deal with it. Sometimes the best thing is not to do anything about it. Like, for example, in the US case, and if you take the example of, say, the government industry, right, there was a lot of panic, a lot of headlines, lots of news, but really not many orders did get cancelled. It was not so simple to just change supply chains and move on to something else. So some of it, you have to weather the storm, stick with it, make sure that you are able to provide whatever risk comes through. It may be commodities, it may be currency, it may be a new jurisdiction, it may be negotiating new regulations. In India, we have never a dull day. Regulations are constantly evolving and for the positive right now. So a lot of that has played out in this year, and I do think that we've come out pretty strong as a banking system. I would give credit to our regulator who leads by innovation and has been doing that for a number of years. I would credit the manner in which they have tried to consolidate, simplify. Very often, there are unintended consequences of some of the regulations, either by the government or by the banking regulator. The manner in which we respond to that, correct that, smoothen the bumps, I think that also shows the intent and ability to show the international investor community that we are here to build a very solid long-term story for the country.
You mentioned about cutting through the noise. I mean, and that's a big challenge for companies. That how do you kind of cope up with whatever was happening? So, could you articulate on what is the sense that you have got speaking to your clients? Is there stress in the portfolio? Are companies coping up with it well? And because that's a very key challenge for a lot of mid-market companies.
Yeah. So I'll split it in two parts: the larger Indian conglomerates and clients, and then the SMEs and suppliers to some of these larger conglomerates and standalone businesses as well. So, speaking about the latter part, there was a fair amount of anxiety. And how do you do business with a constantly changing headline every morning? So, some of that has really helped in stabilize the momentum, the thought process, the ability to invest, and the way forward. So, access to finance, access to capital, access to the right people. So, if I look at that portfolio, at least for our bank and widely in the banking system, I haven't seen any stress so as to speak of. Yes, there are accounts that we are looking at carefully to see how they respond to these. But again, fair to say, we are not really worried about any systemic issue that is arising out of this. Now, when I look at the larger names, this has been a big opportunity for them to find the right valuation, acquire the right beachheads, or grow their beachheads into more meaningful businesses offshore. In fact, sometimes add another line of business altogether, which has not been part of their earlier plan because of the valuations that have been very attractive. So in this year, I think if I just look at my bank, the top three in M&A in the country, we have done about 10 of the largest transactions, whether this is M&A advisory or this is to do with financing of these M&As for large Indian corporates that have gone offshore. And I can say that I think we have the smartest businessmen in the world because they have picked really the right timing and the right price for some of the assets they picked up.
You mentioned about corporates, looking at M&A opportunities. But what's your own sense of, how are corporates approaching M&A? Are they being opportunistic? Are they being strategic?
So I'm going to be controversial. I'm going to say they could do a lot more.
Okay.
While this may sound as if this means more business for me, but truly I think there are opportunities out there, and the larger Indian corporates could do a lot more offshore as well. It is an amazing time to make the right picks and take the right bets. Yes, you need the risk appetite. And if you have the right financial partners, why not? And if you look at exactly what is happening on the reverse as well, if you look at what sponsors and investors are doing in India, in sectors like renewable energy, for example, so the same thing is happening. They are bringing in large pools of capital and putting it to use. And then once the risk cycle is over, the build out is over, they flip the asset over and make a good killing out of it. So there's nothing wrong with that. So building infrastructure for India and Indian corporates going and acquiring markets overseas or assets overseas or bringing back IP into the country. It's a fantastic story.
On the point you mentioned, Mr. Singh, that corporates need to be much more aggressive than they are. It is also a function, I would say, of the demand environment. Playing out, and also the fact that the cost of capital, which was in the past, has changed overnight. So every other asset that you go and acquire needs to be weighed with the pros and cons, given the context of the way things are today.
So that's partly true. But if I can add, if you have a neighbor like China who has overcapacity in many industries, that capacity is going to find its way willy-nilly into the global market. And if your capacity utilization doesn't cross 70 or 80%, then you need that long-term conviction to continue to add capital, which add capacity, which requires a lot of capital commitment and long-term investment. So until you see that tipping point coming in, I think that is the other thought process with probably large business houses have before they do domestic capex. But if you look at what is happening on the infrastructure side as an example, the demand for those real world capacities are going through the roof. So every player in steel, every player in cement is adding capacity, has been commissioning new capacity. And like I said, same thing about with renewables. I can only see that going one way. And the knock on benefit of that, if you look at the way logistics or commercial vehicle usage or traffic of goods across the country, the velocity has increased, is also, we are also going to see the productivity gains from all of this infrastructure that we built, roads, airports,
True.
etc. When that kicks in, I think then we will see a further acceleration of investments that will happen,
that's quite
whether from outside or from India.
Okay. The other interesting aspect is that, while you mention about private investment, and private investment, though in certain sectors has gone up and capacity, would have gone up. But I've just, we just pulled out data over the past decade. And so we are seeing, from what we've seen in the early 2000, late 2000, not even early, late 2000, the peak capacity. Yeah. And for what is today, the average capacity is around 75. And the general conventional wisdom is that you have to consistently hit at 85 to 90% capacity for you to really think of, pushing in capex. And while that trend is visible, what is also visible is the fact that the increasing consumerization of the Indian economy is also giving an opportunity for traditional corporates, which were in commodity businesses, to look at consumer businesses which doesn't require capex, but gives you a valuation bump in the public markets. So that's a play also dynamic which is playing out. So it's not necessary that the good old days of industrial or corporate credit is going to come back the way bankers perceive it should.
Yeah. So you're probably right because, adding, for example, adding an automobile plant today doesn't require the number of physical jobs creation as it required earlier. But it does require a lot of capex because a lot of stuff is robotized or needs to be imported or specialized machinery. So for that, they will require the capex as it comes through. On consumer, you're right. I don't think the capex investment is very heavy, and that is of course part of the evolution of the economy. But again, I would say this is a story of many Indias, and we need all the capex that is possible for us to go to the next level. But like you rightly said, and until the capacity utilization reaches a certain level, new capacity addition is not going to happen. And that's where I was alluding to our neighbor China. As long as they have massive overcapacity, they have no choice. Exactly.
So why do you see the opportunity? If you see the aggregate industry credit, the large industry credit has gone at a very measly CAGR of maybe 3% over the past 10 years. But if you're seeing the mid market, which is the MSME credit, that has gone up quite substantially. Yes. So is that an opportunity that you are also chasing? And is it competitive? Is it remunerative?
Yeah.
Are the yields good enough for you to really go be aggressive on that?
Yeah. So absolutely. The SME is a great focus for us. And this is along with the focus that we have on the affluent customer.
Okay.
So it is the business requirement as well as the personal requirement of this customer that we are looking for. The SME of earlier days is not the SME of today. The SME of today is globally connected. Is exposed to a whole lot of more risks. We talked about commodity currency and a whole lot of other risks. The SME of today needs to understand not only the local regulatory environment, but that of their buyers, suppliers, etc., who are connected to the global ecosystem. So I think that supply chain dynamic, the reason to have a international bank that is involved in your business is the reason why foreign banks are doing really well on SME, despite all the focus from a whole lot of other constituents. Even the non-banking constituents are focused on SME. So for the SMEs, we have 55,000 SMEs, some of them liability, some of them asset clients. The entire focus that on SME is to make sure that they have the entire continuum of products. So whether this is working capital, whether this is to acquire assets, whether this is to facilitate their supply chain and trade finance, that's where I think we score really well, and it's been playing out.
Do you see too much of competition in that space? Because, retail and MSME, these are the two big opportunity that every other banker seems to be chasing.
Yes.
So what's the sweet spot for you, and where do you see that it's not, the yields are still remunerative enough?
So we do feel that the SME proposition that we have is very compelling. we have seen a lot of progress in that. In fact, we are challenging our teams why we can't do more. So I think SMEs do like to bank with us because of the international connectivity that we give them, because of the risk management tools that they have, because of the data and information that they get back from us.
These
which
are
helps them.
largely export-oriented MSMEs that you are catering.
It's a combination of all. It's a combination of all sorts. And again, the individuals who then are the owners of these SMEs are also our affluent and wealth customers. So that part you talked about retail banking. So mass retail is not something that we are focused on right now, and the reason for that is that is very well catered to by the local banks. The reason that Indian promoters of smaller businesses would bank with Standard Chartered Bank is for multi-generational wealth, preservation of wealth, increasing, making sure that is there. All of us are now global Indians. We have aspirations offshore, whether it is investments or whether we have family members or kids studying overseas. So to that extent, again, it plays really well with the proposition that we have. So the end-to-end proposition for an affluent customer, where there is also an international leg involved, where they require local expertise. So I'll tell you a very interesting fact. While more than 90% of them, the SMEs and the affluent customers, are on our digital platforms, the expectation is to have a personalized offering tailored for each of them. And that's where I think that feedback and our ability to pivot to that has really helped. So if you have wealth managers who are therefore enabled to offer the end-to-end requirement for an affluent customer. For example, we have launched, taking customer feedback, we have launched the Beyond Metal credit card. We have also gone ahead and put in place a distinguished offering, which is called the SC Autograph. This is the first country in the world that we have launched this offering, which is a non-discretionary PMS service for large and wealthy clients. The private banking offering that we have globally is also available to our clients in India. So to that extent, I think the feedback from the clients has driven us to marry the digital and the personalized service requirements with tailored requirements, which I think are very well appreciated.
Mr. Singh, it's interesting on the wealth management aspect that you mentioned about, largely foreign banks were the ones who had really established the wealth management space in India very early on. But we haven't seen them really make a mark, and it has been more like a hit and run case. And you've seen in recent years, over the past decade, domestic homegrown wealth management firms have come up and really taken that space. So how do you see that narrative, or do you really see that foreign banks today, including Standard Chartered Bank, really have that edge in the wealth management business?
So I think first I must correct you. The foreign banks in India have actually contributed over many decades to the growth of the innovation in the banking system in India. And a lot of this was directed at the higher end of the customer. So for example, the first digital branch, the first ATM, the first credit card, the first contactless credit card, formats of LCs and bank guarantees that you see today in use were all brought in by some of the foreign banks into the country. So I think firstly, we must acknowledge that piece. Secondly, I think it is less about scale and it is more about relevance. So in the current context, it is really relevant for an international player to be able to offer end-to-end services to a client in India, whether it is about protecting multi-generational wealth, whether it is about creating the international connectivity in investments that an Indian client would like to do, whether it is accessing with the best tools and curated content in terms of investment decisions that a client needs to make in India. I think foreign banks, Standard Chartered in particular, is probably the only one that can offer the complete continuum of this for a customer in a true sense. A wealth manager, not to berate what is already being done or the expertise that exists, but our Standard Chartered Academy, which is the INSEAD SC INSEAD Wealth Academy trained RMs, are probably best in class to be able to offer such end-to-end services to the client. So I'll stop there, but it's all about form people,
Yeah.
and positioning.
But isn't that also becoming very competitive? But today, RMs are very expensive. I mean, the pull and push that we are seeing, does that pose a challenge to foreign banks? Because talent is being weaned away. with equity and much higher payouts.
Yes. So if you look at the entire complete picture, it is what the customer demands from you or what the customer requires from it, which is why I said it is not only about the people, it is also about the position, the product, and it is also the premises that matter a lot. So based on feedback from our customers, especially in the affluent segments, we have now got one third of our India branches which have specific affluent centers in the branch premises itself. We have specific offerings for the global Indians and their requirements for cross border as well. These are things that an international bank can provide, which probably none of the others can provide, and which is why we see a lot of the RMs that actually leave also do come back to the platform at some stage. So that's a good testament to see what the bank can deliver for customers.
We are talking of India, which is, aspiring with its Viksit Bharat goals for 2047. And we are now talking of, becoming 4 trillion. I mean, though the new GDP numbers put us a bit below, but the fact is directionally we are, moving ahead. So how are you plugging into that growth story of India? What are those, I would say, opportunity baskets that you think Stanchart will have a big play?
Yeah. So first, let's look at the priorities of the country. The priorities of the country are to bring in FDI and FPI. Towards that extent, we have already done about 30 international roadshows over the last year since the time I've been here to make sure that the India story is understood by investors into the country, whether it is an MNC or whether it is an investor who comes in. Because of which about 90 plus IPOs of as part of our custody offering we've seen flows from those IPO come through our counters. If you look at the total cross-border flows that happen, and 20% of those flow through Standard Chartered Bank. So we play a very important part in that corridor, if I can put it that way. MNCs, once they come into the country, also require specialized understanding of the sector that they get into, and their banking requirements are pretty specific to the business that they are attempting to do in India. Indian corporates have different pools of capital that they require depending on their life cycle. So to take an example of debt capital markets, where we are ranked as number one, to look at 50% of all ECBs most part of last year were raised by foreign banks, which were largely consumed by Indian companies. Going back to debt capital markets, if you look at $50 billion of international investors' money came into the country through debt capital markets through foreign banks as well. So again, I can only say that it's a extremely critical role that we are playing in connecting the dots internationally. All of this brings again the currency and the volatility into play. So managing that is another very important thing for us. We provide access to Indian banks as a correspondent banks to 120 markets offshore as well. Again, making sure that the Indian banks have the right access to the right products in those markets and ability to manage the liquidity. Sometimes we also do provide them the liquidity. We provide them the structures. We help them manage the risk, which they then help their client and constituents in India manage. So I think therefore a very critical role played for the priorities that they set out for the country.
Yes. So, like you just mentioned about external commercial borrowings, that's the flavor of the season. Is there a distinct shifts in the borrowing appetite of Indian corporates?
So I think Indian corporates are really smart. So unless it makes commercial sense, the color of the money is the same. Currently, it probably makes sense for the better grade companies to borrow in foreign currency, use the money overseas, or swap it into rupees. There is also a theme of CNH billing, where the suppliers in China might provide a discount, and you can have a fully hedged structure, which can also make sense. So there are opportunities that come in from time to time, where again the expertise that a bank like us is able to provide to the customer. Indian companies are very strong, so they and very smart, so they will choose the best possible option that they get, which is with the least possible risk. So they're again very strong governance and transparency put in place through a lot of measures that are regulator as well.
And one interesting trend that we have seen in recent years, especially post pandemic, is that, on the one hand, Indian corporates have DG word, their balance sheets, pristine condition. They're sitting on humongous amount of cash. But in contrast, you have seen the consumer's balance sheets getting levered up to a high extent. So are you comfortable with the fact that, a trend like this is playing out? And is this how economies grow, where corporates are cash rich and consumers are debt burdened?
Yeah, so I don't know whether that's the ideal state to be in, but all I can say is yes, the consumerization, the ability for consumers to have access to financial assets, to be able to invest in the right products, to also be able to borrow and consume, uh, is a sign of growing confidence that they have in their own future and their ability to consume ahead of their own earning capacity. The ability of banks and other intermediaries to lend to these individual consumers is also a testament to the confidence that the banks have or the lenders have in their ability to pay back those facilities. So I do think it's a very important part of financialization of, and the numbers are still very small in terms of access to equity markets, in terms of access to debt capital markets, and access to a lot of the financial products. So we are seeing that cycle and we continue to see that go up. The first part of your question, is it the right thing for corporates who have some amount of cash or more than that to be sitting on that cash? I'm sure their shareholders will decide what is best for them to do. But I did allude to this earlier, which is why overseas opportunities, as and when they come in, very astute and smart Indian businessmen are making sure that they are able to then get access to either new markets, new businesses, or to bring in IP back into the fund.
You mentioned about the increasing financialization. That's a theme that's only got accentuated in recent years, but that's also presenting a unique challenge to bankers, where the depositor, I mean, the saver, has now suddenly become an investor. So how do you see that narrative? And does that really, it's from an industry perspective, does that pose a challenge in terms of CASA? That at one point CASA was equivalent. Now there's CASA is gone. It's just SA. How do you see that?
So now this is my purely personal opinion, but I think we have a whole new breed of investors who have never seen the downside of the equity markets. And probably that's why the assumption is that you put money anywhere, even if it is in any asset class, you're not going to see an erosion of your capital, which is probably a risk that they should be aware of. A bank deposit, obviously, a mutual fund or whatever SIP अच्छा है तो bank deposit उससे भी अच्छा है.
Acha. But that doesn't seem to be what the mutual fund guys seem to say. That, we just recently saw the biggest asset manager come in India with one of the biggest private players in India and making a pitch to invest more than to, create fixed deposits. How do you see that?
Yeah, so I'm making the counter clip.
Oh, so the other aspect of Indian banking in recent years, and now we are seeing, is that M&A, is back in play. If it was once happening in the corporate India, now you're seeing it happening on banking street, where standalone private sector banks are being acquired. And, you already had one phase of consolidation happening among public sector banks. And there is still news flow around the fact that, the government wants a handful of, public sector banks. But generally, if you look at it from a banking landscape, do you see the getting bigger narrative also playing in
Yeah,
the way?
I think this just shows you the opportunity, firstly in the economy and then in the banking sector in general. So the banking sector is a direct reflection of what is happening in the economy. The economy is not doing well. Banks will have larger NPAs and will not have the ability to continue to invest. So that reflection just shows you the confidence that international investors have, and also probably the government has in consolidating the banks. I think the earlier consolidations have gone really well. We've created banks of international scale and size, and the investors coming in brings new pools of capital into the Indian banking segment, which I would say is very welcome given the very large banking opportunities that we see.
Hmm. And on Stanchard's own agenda strategy, is there an branch expansion strategy in place? How do you see that kind of playing out?
Yeah. So, like I spoke about, we are going by what our customers are feeding back to us. And because of which we have gone ahead and made our branches larger format. We have therefore gone and put these large affluent centers and international banking centers within the existing branches. We've also opened, for example, our largest flagship branch in Eastern India. But at the same time, there may be branches that are not relevant or not geographically suitable anymore, which will continue to be consolidated. So to that extent, you will see some branches getting merged with each other. And within the overall construct of the regulation, we will see how we can rationalize things as we go along.
Yeah, it's just saying, as a CEO, 11 months into the job, what has been your key learnings? And what is the one thing that you had to learn and the one thing that you have to unlearn in your journey thus far?
Though I had to learn a lot and also unlearn a lot of stuff. So I can say, banking is, because it is a regulated space, a lot of the things that are non-negotiable is very clear to you. So obviously the regulatory part, the risk management, and the understanding of the local uh, scenario is absolutely non-negotiable. You have to understand that and you have to implement that without any hiccups. What I had to quickly learn about on the retail banking side was especially on customer service, which was one where we got a lot of feedback. I told you as part of that, we refreshed our app, we launched new products. We also have a new credit card, which is called the Beyond credit card that we launched. So that part, I think that part was a nice journey for me to learn exactly how customer feedback can be acted upon so quickly. I would say the aspiration continues to remain high. The momentum that we have and the legacy that we have here also results in a lot of positive tailwinds that we continue to have, and I'm sure we'll be able to build upon that.
Yeah, and Mr. Singh, if you could articulate what is the holy grail that Standard Chartered would be pursuing in India?
So in India, the opportunity, like I mentioned to you, is on SME. It is on affluent customer. We have a very strong corporate presence where we have 80% of India's market cap already banking with us. On the MNC front, we have a very large share of the MNCs that exist in India. And I'll give you an example of the GCCs, for example. On the commercial banking front, which is to do with the franchise. Overall, I think we've done a fantastic job. Correspondent banking is a place where we've made a mark. Gift City is something that we've really seen go by leaps and bounds. We were the first foreign bank in Gift City. We've also launched the foreign currency clearing system at Gift City. Gift City has become the gateway to investments in India, and Standard Chartered, needless to say, has been in the forefront of that story.
Thank you. Thank you for that rich and insightful discussion, Mr. Singh. And all the very best as you complete your 1 year, 10 years in India.